All right, let's get right into it. We're talking about Plug Power, a company that's been at the center of some absolutely wild swings in the market lately. I mean, the stock has been on a total roller coaster, and the big question on everyone's mind is pretty simple. Are we witnessing the beginning of a huge recovery, or is this whole thing just an elaborate trap for investors? Let's break it all down. So everything really kicked off on a recent Friday. Plug Power stock didn't just go up, it absolutely exploded. We're talking a surge of over 13% in just one day. And get this, the volume was massive. Over 120 million shares changed hands, which just completely dwarfs its normal trading day. You just can't ignore a move that big. But this is where the plot really thickens. This huge rally happened just a few days before a really critical shareholder meeting. And at that meeting, the company's actually asking for permission to issue more stock. Now, that's a move that usually sends investors running for the hills because it dilutes their stake. So what's with all the sudden excitement? That's the real mystery here. Okay, to understand what's happening, you have to put yourself in the shoes of the bulls, the optimists. For them, this isn't just some random spike in the chart. No, they see this as the start of a comeback story they've been waiting for, and they've got a few key reasons to think the company's finally turning things around. The bull case really stands on four main pillars. First up, you've got a fresh analyst upgrade, which is a big confidence booster. Then there's a major cost-cutting plan inside the company that promises to make things much more efficient. Third, on the technical side of things, the stock just crossed back over a really important price level that traders watch closely. And finally, word is that some big money institutions have been buying up more shares. It's this whole combination of factors that's painting this picture of redemption. And it all really funnels down to this one single powerful hope. The bulls are betting that after years and years of burning through cash, the company is finally on the path to actually making money. They're looking for that positive EBITDA, basically a key measure of profitability, by the second half of 2026. This is the whole narrative that's getting them so fired. But of course, that's only one side of the coin. For every bull out there, there's a bear who's looking at this rally and seeing a dangerous trap that's built on some really shaky foundations. So let's flip over to their argument and see how it builds a completely different picture. And wow, the difference in opinion here is just night and day. While one analyst thinks the stock is heading to $3, another huge firm, Morgan Stanley, has a price target of just $1.50. I mean, that's a 100% difference in what they think the company is worth. When the so-called experts are that far apart, it tells you just how uncertain everything is. A huge reason for all that uncertainty is this number. A massive $1.66 billion government loan that was supposed to fund the company's growth has hit a snag. It's stalled. And without that cash injection, the company is left with a major funding gap. That forces them to look at other options, like selling more stock, which, as we know, can hurt existing shareholders. This leads us to a really, really important metric, short interest. A mind-boggling 34% of the company's publicly available stock is held by short sellers. Let that sink in. That means more than a third of the market is actively betting that the stock price is going to go down. Now, for anyone who's not super familiar with the term, short interest is pretty simple. It's just the percentage of a company's stock that investors have borrowed to sell because they're hoping to buy it back later at a lower price and pocket the difference. A high number like 34% is a huge red flag to some, but to others, it's something else entirely, rocket fuel. And that brings us to the famous short squeeze. This is a critical concept to understand here. See, when a stock with a ton of short sellers, like Plug, suddenly starts to go up, all those short sellers start losing money fast. To stop the bleeding, they're forced to buy back the stock they borrowed. Well, this sudden wave of forced buying just creates more demand, which pushes the price even higher, creating this powerful, explosive feedback loop. And some people believe that 13% jump we saw, well, that could be the very start of one. So, all of this is setting the stage for a pretty dramatic showdown this month. You've got the bulls, you've got the bears, and you've got all these short sellers, all of them locked in this high-stakes game of chicken, with a few key dates on the calendar that are probably going to decide who wins. And this timeline just shows you how quickly it's all coming to a head. It started with that big surge on January 2nd. Now all eyes are on January 15th for that crucial shareholder vote. And then, just one day later, on the 16th, is a huge options expiration day. That's when millions of dollars in bets on the stock's direction are going to get settled. The pressure is really building. At the end of the day, it all seems to come down to two make-or-break events. First, that vote. Are shareholders going to agree to potentially water down their own stock just to give the company the cash it needs to survive? And second, the business itself. Can their new hydrogen plant in Georgia actually perform well enough to finally stop the bleeding and prove that this business model can work? So what we're really watching here is a head-on collision between two powerful opposing forces. On one side, you've got all this positive market momentum and technical signals, and on the other, you've got some deeply, deeply troubling fundamental business realities. The core conflict couldn't be clearer. You look at the bull side. Huge trading volume, breaking through key price levels, and that massive short interest that could fuel a squeeze. Then you look at the bear side, a stalled loan, a crazy high cash burn rate, and the very real risk of share dilution hanging over everything. It is a perfect storm of conflicting signals. So yeah, this is anything but a simple story. It is a classic high-risk, high-reward situation. You've got the charts and the traders telling one story, and the company's financial statements telling a completely different one. And in the next few days, those two stories are set to collide hard. Which brings us to the final multi-billion-dollar question. Are we watching a true redemption story where a pioneer in clean energy finally gets its act together? Or is this whole thing a liquidity trap where a struggling company is just using market hype for one last gasp? The answer is coming, and it's coming soon.